We have Pramod Amthe, Head of Institutional Equity Research at InCred Capital now joining us. And Pramod, good to have you with us here. Thanks very much for joining us. And we're talking about the autos as a space, Pramod. Just give us the overall view first up on where you stand, because stocks have done well pre the GST cut, after the GST cut. What's your view on your list of stocks under coverage?
So clearly, in terms of sector, we continue to remain overweight. Couple of macro trends which have turned substantially favorable, which will play out. One, there is large stimulus for consumer demand, almost to an extent of rupees 5 trillion spread across income tax cut, interest rates, pay commission, and the GST, which is huge, which we feel will continue to play out for next 2 years plus. Historically, if you look at when such steep cuts on prices have happened, the CAGRs on the 2 year basis on the demand side has been double digit, even though the managements have been cautious to come out and guide post the festival momentum. But we feel it will sustain and it will surprise on the positive. The best cases to look at is, in spite of such tough situations like COVID or in terms of financial crisis, when interventions happen, the consumer has surprised on the auto demand. So looking at the Nifty valuation for auto sector, which is near the 10-year mean level, we clearly see a comfort and continue to remain overweight as we upgraded early September the entire sector.
Okay, all right. Hi, Pramod. Good morning. Good to see you with Nigel on this side. Let's focus on the two-wheeler pack first. We were just discussing about Royal Enfield. My colleague Parikshit had gone down to Goa and had a chat with the CEO, a rare interview. Do catch it during the course of the day. But from the two-wheeler pack, I believe you're more comfortable with Hero MotoCorp and Bajaj Auto. Tell us about them and rationale behind that.
So within the two-wheeler space, the way we are looking at is the mass segment players will be benefited better. One. Second, they will pull through the execution on volumes as the consumer comes through. Even if you look at the festivals, the festival growth has been pretty decent without spending much on the incentives. So that's a positive for the sector. Within the two-wheelers, the way we are positioning ourselves is considering the price gap increase for EV versus ICE. The incumbent ICE players are better placed on two fronts. One, to drive the short-term growth in ICE, and also they will have a more sufficient time and money to put through for EV transition, as we are seeing even the late entrants like Hero building onto it without blinking the eye on profitability. So that is the reason why we like Hero as a topic within two-wheelers, followed by Bajaj. We have a hold on Eicher and sell on TVS.
Sell on TVS. Got it. And from the four-wheeler pack, you believe that Mahindra & Mahindra, which has been one of those most beautiful stocks, right? I mean, big returns. I recall they made that investment in RBL Bank. The stock was 1,500 approximately. It was down 6-7% odd. They have undone that measure and they've gone from strength to strength, whether it is with regard to the tractor segment, gaining market share, or focusing on the premiumization theme as well. Tell us about your preference in the four-wheeler pack.
So within four-wheelers, the start post of GST has been a little slow because of some concerns even on the cess front. Having said that, the first-time buyers we feel will come back over the next 2 years period. Historically, if you look at when interventions happened, the four-wheelers have given a superior CAGR upwards of double digit versus two-wheelers. So we feel that trend will repeat, and hence a four-wheeler preference over two-wheeler will continue. Within the four-wheeler space, we again feel the first-time buyer will be in the small cars or compact SUVs. That's where our preference will be for the companies which already have it or will be taking action there. Mahindra action there is in 2027 versus Maruti, which is strengthening its portfolio in the current situation. So we prefer Maruti over Hyundai. We prefer Mahindra over Tata Motors in the four-wheeler space.
Pramod, the auto comp side, what are the ideas, top ideas?
So within the comps, we have a limited coverage. Within tire space, we feel that the reversal to mean on profit margins are going to be sooner than expected because the price cuts have been steep and consumers may not be so much sensitive on the replacement market. We already seen that playing out in the early part of September, October. We expect that trend to continue. Our preference there is we cover Apollo and Balkrishna. Our preference there is Apollo over Balkrishna, domestic versus international. We like endurance, which has taken a beating post the second quarter results, but clearly two, three drivers which clearly look out for them is content per vehicle is increasing. One, second, they're getting into four-wheelers. They have got the magic on M&A coming through in two acquisitions which they have done in last 2 years. So we clearly see both organic and inorganic growth playing out for endurance. The third one which we like is SAMIL, where clearly the balance sheet is pretty decent to make a benefit of any international turmoil as we go through. So those are the preferred picks in the comp space.
Okay, all right, Pramod. Thank you very much for those thoughts and the views on some of the stocks that you like within the pack.